Hey traders, welcome to Charts and Coffee and my absolutely wild. I've been working all night on class and webinar slides here. Gang, we are finally here. I'm super stoked to remind everybody, or if you haven't heard, we've got our this webinar I'm so stoked for. If you haven't registered already, there it is, simplertrading.com/price. Super stoked for that. And that's kind of the housekeeping for today. We are in this post FOMC environment. We are in an environment where we are dealing with a 3/4 of a point hike, expectations for likely another one in July. And I have to say, the Federal Reserve sounded mostly optimistic. I do not look at the way in which yesterday's presser went. That's going to suggest we're not going to see more hikes. And gang, you know what I kept thinking yesterday? And this is tough. This market's been tough when I'm looking at expectation for follow through from day to day. But if you've been keeping up with the free videos and if you've been watching any of the sessions that I've had in the rooms, if the current time frame you're looking at, for example, the daily isn't working, think about the weekly. Think about that longer term time frame where, for the most part, that's where I build and rebuild and rebalance and reconsider my longer term portfolio. What needs to be there still? What do I have opportunities to continue to build there? And where are the opportunities that I've never had or haven't had in the last 1, 2, 3 years? Where are those wish list prices now? So I think the frustration sets in when we're not able to be traders. We're not able to we're dragon slayers. I always told my husband, I said, us traders are like dragon slayers. We're always looking for that next dragon to slay. And Saturdays, and Sundays, there's no dragons, right? It might feel like there's no opportunity right now, but my approach is, hey, let's go longer term, let's go shorter term, and let's stick with the clearly fewer trends that we have on the daily. The volatility has been great for day trading, and it's been great for longer term positions. So I just want everyone to remember, you're not tethered to an indicator, a style, or a time frame. And if that time frame is not giving you, if that style is not giving you what you need right now, we can pivot, right? You have the ability to pivot. And I'm telling you all right now, as much as I'm telling myself right now, Rag, make sure you're keeping your head up, seeing the whole field and pivoting as needed. But of course, gang, this show is all about your questions, and I'm sure there are many. So let's go ahead and jump into them. And by the way, if you are not familiar, when I refer to the free videos, if you're not familiar with them, the very channel that you're on right now, if you're over at the Simpler Trading YouTube channel, of course, we have our pre-market show every morning. We have our Sunday evening show every Sunday at 6 p.m. And then we have our awesome traders sharing with you their ideas, their outlook, their strategies in the free videos that are at the channel. So if you haven't checked that out, please do. And every Tuesday and Thursday, I've got the free video on top of our daily charts and coffee session, caffeinating and dominating. And our Sunday, let's get going. Let's see what we've got at 6 p.m. All right. So with that being said, kicking it off with, can I go over the difference between the purple and yellow lines for the Darvas? Sure. And notice I've got the Darvas running on the weekly, the daily, and the 5-minute chart on my layout. And let's see here. Purple. All right. So first of all, they don't really mean anything. In other words, I don't have a different opinion of a yellow line over the purple line. So they don't really mean anything different. There's two reasons they're different colors. One, it allows us to pair up the line. So these two yellow lines, they pair up, they belong to each other. These two purple lines, they pair up, they belong to each other. Imagine it this way. Let me grab my drawing tools here. Remember, these were originally something called Darvas box. Now we've sort of modernized them and even visually modernized them. So if you imagine, this is what it looks like. That's a box. We've taken the side of the boxes away because, let's face it, it covers up our candlestick wick. So we've taken the side of the box away, but this is sort of the old school original view, which I didn't tell you I like. But again, sometimes you lose the wick, so we lost the sides on the box. We still have the support and resistance. So that's why the colors exist, to pair up the lines. The other thing is, it's a little bit more inside baseball, but a yellow line begins with the bullish pattern that starts the countdown to the box. And a purple one it starts with the bearish pattern. That's really it. It differentiates whether we had the minor low or minor high to begin the pattern count, and it pairs the lines up. And that's a common question I get. So thank you for the question. Hope that helps. But at the end of the day, gang, it doesn't matter if every single line was a different color. It is automated support and resistance. That's the bottom line. All right. Thank you so much for that question, though. Really, really frequently asked one. All right. Next up, what are my thoughts on Tesla? All right. So if I'm looking at Tesla, let's do this question, Mike. Let's do this question the way that I'm processing the market right now. So my first question is going to be in the moment is, can I day trade Tesla? Are there opportunities to day trade? Okay, if that's a big no, maybe it's not, then I'll go to the daily. All right, well, what's the current underlying market trend? Right, it's down, and it has been for some time. In fact, Tesla's been one of the clearest downtrends that we've had. So short the rip, this is absolutely a short the rip. When it trades up into the wave, I'm looking to get long puts. Okay. The last one, and I would love for everyone to stay opportunistic on the longer term too. Gang, I know a lot of you have been in the markets for a long time, as have I. I'll tell you this much that I know from 32 years of this game: winners, losers, points, rules, right? Tactics, strategy. It is a game. I don't mean to be flip about it. If you think about it as a game, you'll think about it, I think, in a way that is energetically and psychologically more helpful, right? Okay, this is a game. So if I'm going to move the game out to the weekly, now I start to ask myself, if Tesla keeps moving lower and I'm shorting the rip, I'm buying puts when we trade up into the weekly. It's been a good trade. But what about a position? Take a look at that Darvas. Look at those two yellow Darvas right here at 538 and change and 505 and change. Then look at that 200 propulsion. By the way, gang, every one of these tools is available free over at countdowntrader.com. I want you to have these tools that you're able to make some of these decisions, find some confidence, and not feel so bewildered and lost and frustrated and everything else in this market environment. Gang, if we get to 500 and change on Tesla, I'm going to start to think about a longer term position that I can start to build in that longer term position account. So there's a short term day trade, right? If I can find the volatility and time-based edges, I can put on some day trades, right? I can look at the daily time frame and short the rip while the downtrend is intact, which it has been for over a month. Or if I desire to hold Tesla long term, and I do, when we start trading down around that 538 to 515 to 505 level, that's another part of my trading life that's going to turn on, and I'm going to get opportunistic there. So as long as we can look at each one of our preferred time frames and say, where is the opportunity? Love the question, Mike. That's the way I'm looking at Tesla. And I hope that makes sense. And I hope that's practical for everybody here. All right. Next up is the party over, or is the party for? Natural gas. Yeah, what's going on with Natty? I hear you. Arthur, there was way too much made of this rollover in Natty and even the weakness in crude, which we're seeing now, as if this is signs for the Federal Reserve to say back off their hawkish trajectory, as if. Neither one of these are actually moving because of economic cycle reasons. They're not moving because of even decreased demand reasons. We have some supply narratives and we have some news with crude that's a little bit more legislative and a little bit more related to the Strategic Petroleum Reserve. They are dips. Look at natty gas already coming back up. We faded the Freeport terminal export terminal closure the first time around, and many of the traders in the mastery, I see a lot of you folks there, many of them stepped in and faded it with UNG calls this time around. So I'm not looking at a news headline breaking this uptrend in natty. It just isn't realistic to think that even a 21 to 90 day closure of this single export terminal is suddenly the reason for natural gas to roll over. It does reflect there's more supply sitting in the US, but this is not a permanent state. Even if it lasts for an extra month, eventually the market does what? It looks past what it just discounted. And it discounted it in a huge way on the 14th. And now it's saying, all right, what was the trend that preceded the volatility? It's exactly what I teach. Give the trend that preceded the chop the benefit of the doubt. That's Charles Dow 101. In Ragheeism, respect the trend that was. So I don't believe so at all. Probably a little bit more choppy going forward, Arthur, but still viable. All right, next up, David asks, do I still use Bookmap? I do have it running. I do have it running from time to time. It's an indicator that I will look at because it allows me to see volume. It allows me to see size. Now, I will also, and I don't have my trading view on quite yet, but I will. I'll look at volume ledges. I'll look at volume profile. So I don't want anyone thinking they need it per se, but I think it is a cool tool. Right before I did my submarket sonar class and then my day trading class in 2020, I was looking at market profile. I was looking at volume profile. So I bought and used a lot of tools to see, hey, is this worth teaching? Is there value here? And before I present any tool in a class or to the simpler community, it has at minimum, and I do mean the very minimum, been used for 6 to 8 months. For example, the hourly price movement ranges, these have been in a constant set of evolution since 2010. And even in the last 8 months, we've been finding better ways to crisp up the numbers and levels and accuracy on TradingView and TOS. So, if I'm using something, it's going to be used for a prolonged period of time. I do like it, but I would say start with volume profile, start with anchoring some VWAPs. And if volume and more acute volume resonates with you, then I would say you have one of two choices. You could pursue something like Bookmap, which I think is amazing, or you could even take the pursuit to a deeper level, which I haven't done because I like volume profile. You can even get into market profile. But start with the basic tools that you have, just price-based volume, VWAPs, value area high, point of control, value area low. And if that really starts to move the needle, then David, I would take that deeper dive. I hope that helps. All right. Hey, Mark, is it possible that when I see many stocks in the same sector pulling back hard after an extended uptrend, like in oil, could it be a topping pattern? Well, it could, right? I mean, in fairness, here's natty gas going a little bit more neutral. Here is crude oil, not going neutral at all, right? So if crude oil is not going neutral, Mark, I am not going to presume that the chop that I'm seeing in OIH, that's your oil services, that the slight bit of yellow that I'm seeing in XLE, not even enough for me to say that there's a neutral sentiment that's entrenched, not even the least bit yellow here. So imagine this, Mark. My basic answer is no, but I want to show you all, right? I mean, and by the way, same thing with the day trading class tonight. And again, for those of you that haven't registered, I want to show you all how it is that I'm looking at these levels, right? So Mark, imagine, to your point, imagine I assume that here, right? It went neutral. Could this be a precursor to, as you mentioned, a topping pattern? If I presume tops after an uptrend, I'm on the lower probability side of the movement. Do you see how that would have hurt us here? So I want to show you, hey, what's the last time we saw it? And did it work? So Mark, I hope that makes sense. So I'm not going to do it here either. I'm not going to do it here either. So no. And then if we do have a topping pattern, Mark, we can do this intraday and end of day. Is there a 1, 2, 3? Right? Is there that 1, 2, 3 pattern that's forming? And we did not get that here either. So I need a neutral environment. Then I need to see maybe a pattern forming, but I'm always going to presume that a healthy uptrend that goes into chop or a compressed market environment is more likely to continue than it is to top and reverse. Does that make sense, everybody? And that's a great question, Mark. So I wanted to use a past example where we could have said that and how it just would have been a bad idea. Yeah. So the simple answer is I'm never going to presume it, but I'm open to looking for the pattern under the right environment. So thank you for the question. MRO, is it valid this morning? I'm going to keep an eye on MRO. I do like MRO, MPC, Wheezy. Yes, as long as we can keep to our paper cut levels and as long as I can keep to, well, the probability of this continuing. So much like Mark's question, here, what happened? Here, what happened? Here, what happened? Here, what happened? So yes, of course, there's always that one last trend trade. But our job as traders is to play probability, not guess that this is a top or this is a bottom, not guess at whether or not this is the pullback that keeps going lower or whether it's the one that's going to pull back, consolidate, and move higher. But I will say this, Wheezy, if crude oil and RBOB are still in uptrends, RB, and even Natty, if they're still overall heading higher, I'm not going to bet against oil stocks. So great question. Thanks so much. What's my take on IEF after the Fed news? All right. So IEF. So all my cards on the table, we've been short IEF for a bit, right? So when all the bottom picking bond traders said, hey, here's the low, what do? Here's our opportunity to get long puts. Right? So just a different opinion. Some people look at a string of bullish momentum and say it's time to get long. Others say it's a retracement. Obviously, I'm a trend follower. What am I going to say? Well, you know what? This has been a common theme so far throughout the morning. I'm going to presume the trend is going to continue in the direction that preceded the chop. Yes. So I need a rally. I need a little bit more strength, whether that's IEF or ZN. Just need a little bit more strength. And, I'll say this, gang, and I know we're kind of running out of time here. I want to mention this here in the room. We will definitely be talking about it more. So today is what, June 16? We had the first catalyst for potential volatility retracement that could have given us another short the rip opportunity. I was really looking for the Federal Reserve to give buyers that reason to think, hey, let's rally the market. 3/4 of a rate hike is what we expected. That's what we got. And I was looking for maybe a 1 or 2 day just face ripping rally. Okay. And I would look to get long puts. Didn't get it. In fact, the market said, wow, 3/4 of a point, probably seeing another one like that in July, probably seeing a quarter or half point hike in September. This Fed is not pausing. They're really reiterating how much of a problem inflation is. So when are we going to get that opportunity to get long puts again? Gravity is here. 2 opportunities. Tomorrow we have options expiration, OPEX, not really looking for much more than a lot of frantic volatility. What I am thinking about is, remember, gang, we're at the end of the quarter. What could we see by way of a June month-end rebalancing? And could we see something May-esque at the end of the month? Please be patient. There are one, but really basic, almost 2 opportunities that we might see for some rallies to the upside, that rally to the upside in a downtrend. Rally plus downtrend equals retracement. And retracement in a downtrend is short the rip, get long put. So I'm not ruling out that opportunity. We just might have to be a little bit more patient. So I wanted to leave you with that. Again, with the theme being, let's stay opportunistic. I know this environment can be frustrating. I've seen it before. How have I dealt with this before? Exactly how I'm telling you all now. Go out to the weekly chart. Look, when '08 happened, I freaked out like everybody else. And then I thought, take a breath, Rog. Where is the opportunity? And that's when I developed the V score and said, how do I coattail the money flowing in and out of the market? I use volume, right? Okay. That was a weekly tactic. And that kept me feeling like I still had the hands on the wheel, and I was still doing productive things for me as a trader and for my family. And then while I was waiting for those weekly opportunities, the daily for me at that point was almost untradeable. And I went and said, look, I don't need to stick with a time frame that isn't giving me opportunity. And when it does, it seems to be just punishing me with volatility. And I said, how do I use this volatility? And so my life became weekly time frame positions and day trading. I'll just wait it out, and I'll just look for my little 2-hour windows of opportunity and just get flat at the end of every day where the volatility and the gaps could care less. That's how I freed myself up of the concern that where is my next trade going to come from? Where is my next opportunity? So I hope that helps, gang. I do hope that helps. So as always, thank you for caffeinating and dominating. I appreciate your questions, appreciate the time. Y'all are awesome. I'm going to head on over to the futures room. I've got the open, which I'm a little late for, but I will see you all tonight, 8 p.m. If you can't join me live, 8 p.m. Eastern, just register. We'll send you out the recording. Gang, whether you want to day trade or not, there's just things I want to show you that are helping me right now. Yes, we've got a class coming up June 25, but in the next 2 webinars, one tonight, one on Wednesday, I want to at least show you what I'm doing. And then hopefully there's some takeaways for you so you can keep your pipeline full and find some sanity in this time. Okay. So I'll see you tonight. Have a great rest of the day. And I'll see you tomorrow, same time, same station.